Hello and welcome. My name is Patrick Franz with ACI Legacy Group. We're a real estate investment firm here in San Diego, California, and our primary focus is real estate paper, also known as a note. A note is simply an IOU or a contractual agreement to pay somebody back, so a note is the financing side of a real estate transaction. See, if you were going to buy a house from somebody and you had cash, all you'd need to do is transfer over the deed and the deal would be done. Now, of course, there's usually a heap of other paperwork to be filled out when buying a home, but that's usually because of government regulations or stipulations from the lender. For the most part, one document is all that's needed for the transfer of ownership. But in a more typical example, let's say you wanted to buy a house, but you did not have the cash to pay for it, then you'd need to get a loan or borrow money to buy the house. This introduces paper, or what we call a note, into the deal. So when borrowing money to buy a house, there's only two important forms that come into play essentially. One of those documents is called an IOU, or what we call in the industry a promissory note, or note for short. The second document is called a mortgage. See, the mortgage is a document that is used to pledge a home as collateral for the note. Meaning if the promissory note is not paid back under the agreed terms, the mortgage document allows the lender to take the house. So a note is simply a promise to pay, like an IOU. So perhaps here's a more common comparison that everybody can understand. Every one of us has actually done a note trade or a note transaction at one point in life by writing a personal check and handing it to somebody else. Just think about it. If you were to accept a check from someone, you'd probably ask them if the check is good, meaning do they have the money in their checking account if you go cash the check. Simply put, you'd want to know for a fact if they have the collateral in the bank to back the check or not. You'd also basically have to judge someone's character or trustworthiness. And between the trust and verifying there's money in the bank to back the check, you'd probably accept the check, I'm assuming. Does that make sense? Now, with the mortgage note, of course, you'd want to judge the person's character who signed the note, but the physical collateral backing the note is a heck of a lot better than cash in the bank. The collateral backing a mortgage note is the actual house itself. The reason it's better than cash in the bank is because cash in the bank could easily go down to zero, and you'd have no collateral to back a note. Now, in real estate, there's always value in the house, so your money's actually safe. Does that make sense? Good. So let's take a bit of a deeper look at the two types of notes that I like. There are non-performing notes and there are performing notes. A performing note is when the person who borrowed the money is making their payments on time as agreed in the terms of the loan. A non-performing note is, of course, exactly the opposite. Someone who borrowed the money is not making their payments as agreed. But here's what I want you all to know about performing and non-performing notes. These notes are bought and sold daily on the open market, just like stocks or gold or silver or bonds or mutual funds. And that's what we do. We buy and sell these mortgage notes so that we can offer a much higher rate of return to our investors than those other options, with true collateral to back the money. This is what banks have known about for a long time now. We get to have a secure, collateral-backed investment with a steady rate of return. Now, where does our company ACI Legacy Group come into play? Over the years, ACI Legacy Group has built relationships with small hedge funds, banks, and private sellers around the country. Because of these relationships, we have access for our partners to purchase these notes. We have assets, in fact, as valued as low as $10,000, of course up into the millions. But our team at ACI Legacy Group completes all the needed research and due diligence to create turnkey investments that can be had for a beginner investor or for an advanced investor. Some of our clients use these notes to feed cash flow into their IRA for tax-free profits, or they use cash flow notes to pay down debt, or simply just want to live a better, more financially free life. We feel that mortgage note investing is the best way to get the three most important things an investor looks for: safety, growth, and cash flow. So thank you for watching, and please feel free to go to our website at investbrilliantly.com or reach out to me personally if you have any questions about how to invest in notes and grow your legacy. This is Patrick Franz signing off, and I'll see you next time.